Allen and Alistair, take one.
Cut. All right, Al. So we've
Kick it off.
we've spoken so many times about broken promises in this industry.
Yeah, we
And I
have.
think with specific reference to clients, we've covered in previous discussions we've had with the advisor and obviously broken promises in that space. But perhaps a little bit of let's give a bit of airtime to the broken promises to clients.
So, yeah, around that topic, Al, I mean, broken promises, client focused. We were touching on a little earlier in terms of let's unpack the advice and the advice process around. Often we see a product first advice process
Absolutely.
rather than a advice first process.
Yeah, and I think again that's the narrative that's been written in this industry. It is you are drummed product information or product knowledge, which is good. You need to have it.
Right. Yeah.
But I think at the core of it all, the reality is that regardless of which insurer you're with, when it really is needed, they all pay. So I think for us, the focus has got to be far less on the bells and whistles, and far more focused on the actual advice. So what is the actual need? And let's solve the need rather than looking at selling bells and whistles.
Yeah. It's almost taken to the extreme where, again, we saw it the other day, where the client has to convince us as to why they need insurance. Yeah. Asset first use rather than insurance first.
Well, we actually had an incident yesterday. Well, I say an incident. Ed actually mentioned it, that he overheard a conversation with Alex speaking to one of our clients who were looking to increase. And she was literally saying, well, there's no need for you to increase. In fact, if you increase, there's I think a common misconception that the more I spend on it, the better it is. Now, there's some relativity in that based on, well, the more you're spending on insurance, the more insurance you have. But I think the problem that exists in our industry is people are oversold insurance.
Yeah, most
And
definitely.
often not reviewed because it's a commission-driven space. Advisors don't want to be reducing stuff because when they reduce, it costs them money. So again, talking to what we spoke around earlier is that financial freedom for the advisor. He's not dependent on the next deal. Is giving the advice where there's a little bit of money that comes off the table is not the end of the world, because as an advisor, they're picking it up on the back end, but the client's in a far better position. So the beauty is that the insurance needs to be reduced. As time goes on, your asset value grows. So you need to be reducing and reviewing your insurance every year. And if you're not, frankly, you're spending too much money on it.
Yeah. And I think that's where we are really passionate about what we do in terms of understanding clearly what is the actual need, making sure that the shortfalls are addressed and not overlooked, but at the same time, that any surplus that you may have, back to what you're saying there, get rid of it, save the money, rather redirect that into building your wealth.
Yeah. And I mean, part of our presentation that we do to clients shows the maze.
Yeah.
And one of the comments on the maze is obviously navigating through this, your path to financial freedom. But also that the focus for us is more on growing wealth, growing assets. I've always said that, if you look at a Warren Buffett, and I don't know him personally, or any of his personal details, but I very much doubt the man's got any insurances in his personal capacity. I mean, he earns enough interest per hour to buy the hospital if he gets sick.
Per minute, probably.
Exactly. So I think what we're trying to create is little mini Warren Buffetts in all of our clients, that you've got enough capital of your own that you can rely less and less on the insurance.
Yeah.
So the focus, and I think we both started there.
And that talks to also retention of clients.
Yeah.
I think we've chatted on it before, where the industry average of retention and loss of clients is around 20%.
Yeah, it's north of 20%.
Our stats are below around the 1% mark, which is not something that we actively track. It's a natural result of the process, and the process being done right.
Yeah, so I think broken promises as far as clients go is there's a lack of understanding of the need for insurance. The concept is borrowing money until you have your own, but there's not enough focus on the till you have your own part.
Sure.
Because again, how the industry works is there's more remuneration built into risk insurance that there is in the investment space. So advisors traditionally are not very focused on investment. They're more focused on risk cover.
Yeah. And often they don't know how to connect all the dots together. How many times have we come across a client that doesn't have a will, who's just got insurance in place, or they have a will, but the will doesn't talk to what the financial plan, or rather how the financial plan plays out and the flow of the money, often creating compounding issues, cash hitting in the wrong place, triggering tax unnecessarily.
And I think that's a great place to pause, to be totally honest, and say, cool, we started this by saying that people are sold product advice over financial advice. And what you're alluding to right now is financial advice. It's the age-old example that we use is a person purchases a home and has a bond of 2 million rand, and they run out and buy life insurance for 2 million rand. But no advisor, or very few advisors, often ask the question, okay, we've got your home covered, but what happens in the event of your death? Where does this home go? Is there a valid will in place? I mean, the stats are frightening in terms of wills in our country. Very few have a valid will.
And I think that's a massive problem that Capital Legacy is aiming to solve and is solving
in a massive way. And I mean, they just operate at another level, which is why we've elected him as one of our very good partners in that space, is they do that job exceptionally well. But I think to add further to that story is that where advice plays a massive part is actually understanding, well, what is the purpose of this home? Where is it going? Is it being left to family? Is it going to stay in the family? Is there a requirement for a trust? It's transfer costs that need to be catered for. It's the people receiving it. Are they minors?
Understanding how the accrual applies to the distribution of your estate.
Absolutely. And to your earlier point is you've got insurances that generally cover the debts, but is the money flowing to the right place? So insurance policies normally have beneficiaries nominated on it, but you end up with an insolvent estate. So it's planning versus product selling. And I believe that's what we are doing fundamentally different to what people would ordinarily experience. So I think you're adding to the broken promises. I think there's a lot of people are oversold stuff. And I think promises are made and never really, no reviews happen.
Continuing with the theme of broken promises, and then coming back to this negative experience that clients have in many instances, and that we often hear about around the bra. Where does that come from? What has driven that feeling, that narrative that is so often touched on?
Al, I think it's a very simple answer to that question. I believe it's knowledge. There's not enough emphasis on advisors upskilling themselves and understanding what financial planning is. There's more time spent on upskilling on product than there is on actual financial planning. And the reality is, if you don't know, well, you can't speak into it.
Often that we see is that the advisor comes from a space where they are trapped in a limited sort of structure, and because of the targets and that they need to hit, that knocks on to that negative client experience.
It does, and it's that chicken and egg scenario. It's the proverbial catch-22 that they're caught in, is that they need the time to allocate towards upskilling, but they also need to sell product in order to pay bills at the end of the month. So again, what we are unlocking is the ability to give that financial freedom so they can sharpen the axe in the trade. Like if you line up 10 meetings and new clients, 10 out of 10 will say, never thought about it like this, because we have the discussion around the need for insurance, the purpose of insurance, why you should
consider deeper understanding and unlocking.
It's not just,
what is the purpose?
You need insurance. Okay, why? Why do I need insurance?
Don't spend money on it if you don't need to. Don't waste money on it if you don't need to. I mean, I've got a heartbeat, my blood is warm, I'm warm. I'm the first to say that. But I very clearly understand how much money my family requires to be okay. How much cash my estate requires for liquidity purposes, and I don't have enough cash, so I'm renting the money until I've got my own.
Exactly right. And I mean, a funny story that I remember from in my early days, because we all start out, Bambi in the headlights, and you're trying to figure this all out. But I remember going up to Joburg and I'm meeting with a client there. And we started having the discussion around, well, what is the need? So I'm trying to uncover this need is there any need for insurances in his space? And to be honest, that was early days. So you were needing the deal. If you were hoping to sell something, you needed to pay bills.
You were just starting out.
You were just exactly right. And I remember chatting to this guy, and he was a youngish guy, but he had a good corporate job. and we spoke around disability and sort of got stuck there because he had his brother was disabled as a result of an accident, permanently disabled. So in my head, I was kind of going, oh, this is great. I'm preaching to the converted here. The guy knows exactly what it's all about. But what I did do is I stopped listening. And he was unpacking the story of his brother. So when I went away and came back with a proposal, I thought, well, the guy needs disability cover. And I'd proposed disability cover to him. And he said, thanks, but no thanks, because my parents already kitted out the entire house. And if anything happened to me, I'll just slot right in. And I think the point in that is just that you got to spend more time listening to what a client's need is to actually identify what products are suitable, and then obviously manage that.
But that talked back to the comment earlier. And I mean, it was just when you were starting out, it was product-focused financial planning and not advice-focused financial planning.
Absolutely.
And that makes a massive difference in the client experience.
And he never became a client.
Yeah. Never did.
Because I was trying to sell a product instead of actually advising the client. Yeah. So I suppose it's lessons learned. So we start then. I think the point in that is that we're fixing the mistakes of days gone by.
Yeah.
It's one of those, we've matured in this space.
And we made the mistakes.
We did.
We've been there.
We did. And I think we're honest enough to know that and not embarrassed to admit it to any clients. Fortunately, all of our clients are still around, most of them. And we've had the opportunity to obviously advise better rather than being product focused. And that's what we're trying to, the culture that we're building here.
Most certainly.
Is that advisors need to have the knowledge to give advice-based planning and not product-based planning.
Well, what really annoys me is how it's sold, wrongly all the time. I had a client phone me on Tuesday this week. We mentioned a couple of stories of these are just things that happen of late. He bought a property recently, a holiday home, super excited about the place. The consultant that they were dealing with from I think it was a bond originator, said to them that no, they needed to have life insurance for the bond approval. So obviously sent them a quote and all of that, and it was highly expensive. So I chatted to him and I said, look, it's a good idea to have your bond settled, of course, and that's part of the financial planning discussion. But let's first understand, is it a requirement for your bond approval? Bypass this bond originator, go and speak to the bank that's actually approved it or is in the process of approving it, and find out from the horse's mouth, which they did. And guess what? It wasn't needed.
It wasn't a requirement.
Yeah.
Yeah, and I think it was the stories also go the other way, where yes, our focus is on reducing risk as far as we possibly can, but a lot of people in our country are underinsured. And I remember a story of a guy who phoned me up, and it was quite tragic that their friend, they had actually gone out fishing, and their friend had a heart attack, and I can't remember whether the friend died on the boat or died later in hospital, but obviously this brought about, listen, I need to have a look at my own stuff. But his mandate, when I actually went to go see him, was to reduce, because he felt he was spending too much money on his insurance portfolio. So I went there and we ran through the process, and I understood, we just uncovered his need. And the long and short of it was he actually ended up spending quite a lot more on the portfolio. He ended up increasing it.
Because you reinforce the need.
Yeah. But again, it's to the need.
Sure.
It's not just selling for the sake of selling. Is there a need? Let's uncover it and let's make sure you're covered in that space.
Look, let's make no mistake. There's sales in every aspect of life, but we don't sell. And I think that's the thing. There's many good advisors out there that don't sell.
Yeah.
It is a sale. There is commission that's paid, but the process is uncovering the need and allowing the client to actually ask for it.
And I think there's also a little bit of there's responsibility that a client needs to take in this space as well. And I think often it's the advisors he takes the blame all the time. He or she takes the blame all the time. But clients also need to understand that their portfolio is their own.
Yes.
And it needs to be reviewed on a regular basis. Don't wait for the advisor to make the phone call. Yeah. Advisors do get busy. We get busy. And sometimes you miss a review and it's not intentional. But clients need to also pick up their phone. But that relationship needs to exist.
It's a two-way street
for that connection to be made. Yeah. So it's in reviewing your portfolio. It's having a plan put in place, but it's reviewing it regularly as things change in your life.
Yeah. And that plan changes all the time. I mean, there's marriages, there's kids, there's divorce, there's starting a business, there's the loss of a partner in a business, loss of a loved one, planning for the future. Your life and your financial plan is constantly changing and needs to be updated. Al, yeah, I would like to chat around the conversation that we have with clients as opposed to uh, clients being sold to. And clients should enjoy the experience. Clients should want to get together with their financial advisor, their wealth manager, whatever it might be. It should be an engaging, rewarding, and you should leave an experience and you should leave the room or leave the meeting feeling comforted, feeling relaxed, and knowing that your affairs are in order. And something that is very strong in the Edge culture, which comes from the top all the way through the company, is it's around having a conversation.
Yeah.
And through the conversation, you get to understand the person, their feelings, the consequences of certain things. And if you don't ask those questions to really get to the truth of the matter at hand, how do you understand what's important to the client?
Yeah, well, it's a journey. It's a journey that we take with the client and them with us. And I think what we are definitely changing, and we're seeing it in the clients that we interact with, is they're not avoiding the phone calls. And it needs to be a pleasant experience. It's not a, oh my gosh, it's going to cost me money. Oh my gosh, like, what are they trying to sell me this time around?
Sure.
It actually needs to be a meeting that you're looking forward to, because it's a little recap on where you were last year, where are you now, how have we progressed, and what can we touch up, what can we clean up, what can we enhance, what can we do better with?
What's playing on your mind?
Yeah, things change, the industry changes, the products change. So it's keeping up. The days of you buy something and leave it, previous generations did that. I mean, we still see it today. You've got a 20 Rand a month policy that's been going for 30 years. And then people would go, no, we'll leave it. I've had it for so long. And you go, but it's not even relevant anymore. It doesn't even fit into this mold and this world we live in.
There's no cash value that it's building up. It's just insurance that you don't need.
Yeah.
So stop spending money on it.
And I think probably what's caused that is that because of the lack of advice, people are almost depending on their own skill and their own ability and their own, if I could say, opinion on whether I should keep this insurance or not.
Yeah.
And I think the reality is you're not qualified for it. Unless you're a financial advisor in the space, as a client, you don't necessarily know what's good and what's bad and what you need to retain and what you can get rid of. So that meeting is incredibly important.
Also, being in the independent space and being in the space where, I mean, through the help of LPR, we've covered all the major providers in the industry, not just the minimum required 3. Being able to be flexible, dynamic, and cherry pick the best of to tailor make a solution for a client has been amazing.
Absolutely.
To that point, I mean, some insurers are better priced for certain health events. You've had a cancer or something like that in the past. Certain companies accommodate that better than others. Likewise, if there's a history in the family of an illness, or you are diabetic, or the nature of your occupation. Is it deemed more higher risk due to the type of manual work that you're doing in your day to day, or the environment or the height that you're operating at, for example?
Yeah, it's the traditional, not one shoe fits all.
Yeah. I suppose in heading towards wrapping up this conversation, there are a couple of questions floating through my head, and it really comes from a space of, is the relationship transactional or is it trusted? And so a question to ask to advisors is, are you bound to a particular product or particular suite of products? Are you limited choice? And how does that impact on your advice that you give? And that would be a good question for a client to ask an advisor.
Well, I think also just adding to the broken promises theme, it's advice to clients would definitely be, if you're not comfortable with your advisor, find another advisor.
Yeah.
You wouldn't stick around with your doctor if you're not comfortable with that doctor. So people are sometimes over loyal.
Yes.
To advisors. And I mean, heck, I hope that all of my clients stay loyal to me, because,
you're going about things the right way.
Yeah, you don't want to lose them. But at the same time, clients have to be selfish. And I don't believe that they are selfish enough.
Yeah.
It's ask the questions. And I think, it's built on, the industry, unfortunately, is being built on shaky foundations. And what we are doing and succeeding in is just relaying those foundations and giving the advisors and our clients just a bit of a fresh start and the ability to build a solid plan that'll last for generations to come. We want to create wealth. We want to create legacy, and we want to be part of that journey.
And it's a plan that they have really built.
Yeah.
We've just guided them on their understanding by asking the right questions, but it's a plan that they've built around advice, not product.